Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is an economist specializing in the foreign equity, currency, and gold markets, the president and chief global strategist of Euro-Pacific Asset Management, a best-selling author, and the host of the Peter Schiff Show. We're going to discuss the expansion of global conflict and what it means for the gold market, the state of the economy, his forecast for inflation, and much more. It's Peter Schiff. Great to have you on the show.
Oh, thanks, Jesse, for inviting me on your program.
Well, let's start with the recent ballistic missile attack on Israel by Iran, a major escalation in the war, and no doubt Israel will be striking back, perhaps perpetuating a circle of violence that threatens to ignite World War III. What is the potential impact of this expanding conflict on the broad market, precious metals, and the oil markets as well?
Well, hopefully that is not the case. But yeah, any type of hostilities is potential, negative for the global economy. Anything that diverts resources away from peaceful enterprises and the production of consumer goods towards warfare and the production of military goods undermines our standard of living, raises prices, ultimately ends up leading to more inflation because governments inevitably finance wars by creating inflation. They don't want to risk losing support for the war by raising taxes to pay for it. They don't want to cut back on other spending, so they just create money. They go into debt, and the central banks create money, and so we have inflation. It's not just the loss of life and even the loss of liberty. Usually, whenever there's a war, that's when the government takes advantage of the opportunity to grow its power and to diminish the individual liberty of the people. So we really, don't want wars. But unfortunately, in Israel's circumstance, Israel was attacked and will continue to be attacked unless she defends herself. And, so this, unfortunately, sometimes you need to fight.
Well, I want to touch on a post you recently made on X where you said the only way the Fed will get U.S. inflation rate back to 2% is if the government reconfigures the methodology for computing the CPI again, further increasing the extent to which the CPI understates the actual rise in consumer prices. Do you expect them to once again play with the numbers in their CPI calculations to come up with a result that is even more fake, or do you expect them to say, well, 3%, 4% is now the new target?
Well, they'll probably do both. They're probably going to cheat again and find a way to correct what they say is a flaw in the methodology. They'll say, oh, we need to make it more accurate, which is just a lie, meaning to make it less accurate, but just to make the number lower. But they'll probably end up having to concede that 2% is just too low. Where'd they get 2% anyway? They got it from the Reserve Bank of New Zealand that came up with a 2% ceiling, not a target. And the idea was if inflation got as high as 2%, that meant that the central bank needed to do something about it. But as long as it was below 2, that meant that it was okay. So it didn't mean that 1 was bad or a half was bad. It just meant that 2 was too much. But that somehow got turned into a target like we need 2. If we don't have 2, all hell's going to break loose. But the whole number is very arbitrary. And so if they can claim we need 2% inflation, they can say, 2% is not enough. We need 3 or we need 4. Well, we need it like a hole in the head. We don't need any inflation. The government needs inflation, and the central banks cooperate by creating it.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. We have perhaps one of the most polarizing and bizarre presidential elections coming up in recent history. We've got Trump talking about tariffs on the economic side, and we have Kamala talking about giving money away. You buy a house, here's some money. You have a kid, here's some more money. She's talking about price controls. How do you view either a Trump term or a Kamala Harris term in terms of its impact on the economy and on people's investment decisions? Is there any difference?
Well, I mean, on the margin, Harris is worse than Trump. The deficits are going to go up under either administration, so that's a negative. We're probably going to have higher taxes. If it's Trump, it'll be through tariffs, which are taxes, and contrary to what the Republicans claim, will be paid by average Americans. But average Americans need to pay more taxes. I mean, if we're not going to have massive cuts of government spending, then the government has to collect more revenue. Tariffs are a better way to do that than through higher income taxes. Income taxes are much more destructive to the economy than tariffs. So if it's a choice between raising income taxes or imposing tariffs, I'd say tariffs. But my first choice would be massive cuts to government spending. But neither candidate is proposing that. Harris is proposing a big expansion of government spending. She wants the government to give everybody $25,000 to buy a house, $50,000 to start a business, $7,000 to have kids. So that's, where's that money going to come from? Neither candidate wants to cut Social Security, Medicare, Obamacare, government pensions, defense. In fact, the Republicans want to increase defense spending. I mean, the Democrats are all about warfare spending. They want to perpetuate wars. At least Trump wants peace. Peace is cheaper than war. So, I think any way you look at it, I mean, it's better to have Trump. But I think that the most important distinction, because the economics is not that big, right? It's just a cultural. It's the freedom of expression, freedom to oppose government, freedom of speech. That seems to be what's more on the ballot, because the Democrats want to stifle all that. They want to stamp out individual freedom. They think that we shouldn't be able to criticize government, that we shouldn't be able to say things that they don't like. They call it, well, it's hate speech. No, it's not. It's just speech that they hate. And disinformation is the truth, right? When the government is lying, the truth is disinformation. But you never want the government to be the arbiter of what's truth and what's not. You want people to be able to speak their minds. And if they lie, well, let the market expose that. Let other people come up and criticize that. If you're trying to stifle somebody's speech, it's probably because what they're saying is true. And the only way you can combat it is to prevent them from speaking.
And so do you think this crackdown on free speech is happening across the West? Further government overreach and intervention into people's lives. Is this connected to the massive levels of debt and the fiat system, which is a print or die situation that we're in right now? Is this a way of the government kind of getting ahead of a potential crash, is kind of what I'm trying to ask, and get people under their grip?
I think it's all connected. When the government is usurping power and stripping individuals of their freedoms, people are going to complain about it, right? They're not going to necessarily just take it lying down, right? They're going to put up some resistance. And so the government wants to make resistance much more difficult. And so the more controls that they have on us, the easier it is to prevent any kind of resistance. And so that people just fall in line and accept, the new order, right? Of a more powerful government and less free individuals.
And where are you right now on the narrative of central bank digital currencies? The Central Bank of Canada recently announced that they are currently abandoning their pilot project for a digital currency. At least that's what they're publicly saying. This has a lot of people celebrating, but then on the other hand, now they're trying to pass some new pandemic preparedness bill that has all sorts of Orwellian language in it. How do you think a Fed coin or some sort of central bank digital currency is going to be one of the potential exit routes that the political elites see for themselves in the West?
Yeah, I mean, ideally, we'd have a complete separation of money and state. I'd like to have the free market determine what money is and let the government collect taxes in whatever the people are transacting in. I don't like the government to just be able to conjure money into existence out of thin air that has no fundamental value to it. So that's the inherent problem in our current monetary system, the fact that we don't even have any money. It's just all based on fiat. But I think a central bank digital currency would be just even worse than what we got now, because I think the government would have even more control over the money if it were digital, because at least when it's physical in paper, yes, if you transact through the banking system, through your credit cards, debit cards, PayPal, things like that, yes, the government can figure out what you're doing, but you still have a way to be private and you can use cash. And I'm not talking about, well, I'm advocating for criminals to be private. I'm just willing to tolerate that so that honest people can have privacy. And that's what keeps the government honest, because if they know that people have no privacy, they're more likely to oppress them because they know that organizing any kind of resistance is more difficult. So we have to preserve some individual liberty and a right to privacy and the ability to transact, not because I want to do something illegal, but because I don't want the government knowing every legal thing that I do. And of course, they may criminalize a lot of conduct that is perfectly legal today. And what the government does would be illegal. The government would be unconstitutionally outlawing what should be lawful. And in that case, it's the government that's the lawbreaker. But the government, if they take away our cash, then they make it more difficult for us to get around their unconstitutional laws. But that is where they're going, And of course, it'll be even easier to, manipulate the economy, because if they could just load up our digital wallets with cash that has an expiration date, they could really say, okay, everybody go out and spend right now. And if you don't spend your money, it's gone, and really try to, micromanage, consumption spending, because they always try to stimulate the economy. But of course, the stimulus doesn't work, but they do it anyway.
So as a part of this ongoing war on cash, actually, Israel is talking about potentially outlawing their 200 shekel bill. There's some language in that bill that they would like to pass that includes potential outlawing of precious metal sales. Could that be the actual end game here for some governments when they really get to that desperate situation as the fiat system crumbles?
Yeah,
could we see a move to outlaw gold and silver?
Hopefully that doesn't happen. But I mean, if that does, that's very unfortunate for Israelis. And it basically is a victory for Hamas because it ends up meaning that Israelis are less free. And so they've maybe achieved part of their goal. I mean, that's what happened in the United States. The 9/11 terrorists succeeded in dramatically limiting the individual rights of Americans, not because they killed 3,000 of us in those buildings, but because our own politicians reacted with the Patriot Act, which came up with all these new restrictions on individual liberty and privacy, which have dramatically increased the costs of banking in this country and all sorts of other transactions that we've been paying for ever since. But we surrendered a lot of our freedoms, not because of the terrorists, but because of our own government.
Russia is going to be holding the BRICS Summit 2024 from October 22nd to 24th with a focus on, quote, promoting the entire range of partnership and cooperation within the framework of the association on three key tracks: politics and security, the economy and finance, and cultural and humanitarian ties. Many expect the announcement of a new currency for trade between member nations, which involves gold, at this summit. What are your thoughts?
Well, I mean, certainly the BRIC nations are, basically building a new monetary system, brick by brick. But It's going to happen. I mean, they're going to supplant the dollar. It's only a question of when, not a question of if. The timetable, I think, was accelerated by the Biden administration's sanctions against Russia, which really was a wake-up call to the world that you need to get out of the dollar, that you're too vulnerable. You're basically beholden to the whim of the United States to impose sanctions on you if they don't like something that you've done. That should be particularly problematic for the Chinese, because we're constantly criticizing the Chinese. It doesn't make sense for them to put themselves in this position. So obviously, they're going to be moving away from the dollar. That's why the price of gold keeps hitting new record highs, even though American citizens have been selling their gold all year. So have a lot of other Europeans. It's foreign central banks and people in the BRIC countries that have been buying the gold that Americans have been selling. And they're doing it for a reason. They're going to keep on buying it. The price is going to keep rising. Eventually, the American investors who sold their gold are going to try to buy it back. Of course, it's going to cost a lot more money. And people who never bought any gold are going to start buying gold. And so then, the prices are going to start to move up much faster. I mean, so far, it's been a very slow, orderly ascent. There's been a lot of doubters, a lot of naysayers. The gold stocks, the silver stocks, are dragged behind very reluctantly. Every once in a while, they make new highs, but then they get clobbered the minute gold goes down $50. It's like, oh my God, this is it. It's going to crash. But once we really get, north of 3,000, 4,000, who knows, you're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up. And it's really not gold prices going up. It's the value of the dollar and other fiat currencies going down. When our republic was formed in 1789, you only needed $20 to buy an ounce of gold. When we formed the Federal Reserve, well over 100 years later, in 1913, you only needed $20 to buy an ounce of gold. And even as late as 1970, you only needed $35 to buy an ounce of gold. Now you need $2,600. Now, it's not because gold has changed. It's exactly the same. It's the dollar that's changed. It's worth a lot less because we have so many more of them in circulation relative to how much gold we have. And the rate at which dollars are created is going to increase exponentially in the years ahead. And so gold prices are going to go parabolic.
Silver closed the month of September at around $31.50, a monthly close not seen since January of 2013. When we zoom out like this, it looks like a very bullish setup for silver. What are your thoughts on the silver market? Do you expect higher price action ahead?
Silver is cheap. And again, I've thought that for a long time, and it's been cheap for a long time. I mean, if you look at the gold-silver ratio, silver is cheap relative to gold. And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up, right? Silver was $50 in 1980. I mean, how many things could you buy today for less than they cost in 1980? I mean, other than electronics, right? Like a television or something. But a commodity? I mean, silver is a bargain. And, you got to buy it. I mean, I've been talking about it for years. And, I remember when silver was under $5, under $4, when the century started. So it's been going up, but it was so cheap, in 2000, 2001, with $4 or $5. Gold was under $300 an ounce. Gold has gone up more than 10x so far this century. It's almost not quite 10, but nine times. The Dow is only up a little over 4 times. The Dow was about 10,000. Now it's a little over 40,000. So in terms of gold, the Dow has actually gone down. But it's still, I think, expensive relative to gold if you take a broader historic look at it. So the stock market is expensive. What's also cheap is oil. Oil prices are very cheap. You can get almost 40 barrels of oil for an ounce of gold. That is historically cheap. That means that oil prices are not going to stay at this level. They are going up. And that is bad news for the CPI because it's going to weigh heavily into headline CPI. But all this, I think, is going to occur against the backdrop of a U.S. recession, which means real interest rates plunge even more than nominal rates. We go back to quantitative easing, and that's going to send gold and silver to new highs. It says that for silver to hit new highs, it's a much bigger move. That's why people should be buying it. We sell physical silver at Schiff Gold, so you can go to schiffgold.com and load up on silver. In fact, we now have a new e-commerce platform on the Schiff Gold website. You could just go there, look at the silver products that we recommend, buy them, put them in your cart, check out, and then you just got to pay, and we'll ship it out to you.
Well, let's talk about the gold mining sector for a moment. You mentioned that the stocks are getting sold off every time the gold price takes a small hit. You posted it on X in the past about this issue, saying that gold mining stock investors are climbing a wall of worry at the moment. And obviously, a lot of people expected the gold miners to be a levered play on gold, but here we are. They've basically kept pace with it year to date. What's your thoughts right now in the gold mining space?
Yeah, I think it's really, really cheap. I mean, I own a lot of gold mining stocks myself. It's by far my biggest sector that I have in my personal portfolio. And I added, considerably to that position earlier this year, back in February, March, when gold was still close to 2,000 but above, and Barrick and Newmont were hitting multi-year lows based on downgrades by Wall Street. I hadn't anticipated buying more, but I don't look a gift horse in the mouth, and so I took what the market was giving me. But I think that these stocks are historically cheap. The sentiment is historically negative. I love being a contrarian. Normally, how do you buy gold stocks when gold's at an all-time high and be a contrarian? Well, you can, because nobody expects gold to stay at an all-time high. People expect it to go down. And, for many, many years, the gold mining stocks were the ironic victims of inflation. And people just assume that that's the new normal. And why they were victims of inflation is inflation drove up the cost of mining. But the price of gold didn't go up as much as the cost of mining it. And that was because people didn't realize that inflation was actually as bad as it was. And so that hurt gold mining profits. Even though, yes, we can sell our gold for more money, it's costing us even more to get it out of the ground. Well, I think now that gold is finally broken out of this consolidation that it's been in since 2011, I think that gold is going to outpace the cost of mining it, especially now, like I said, oil has never been this cheap priced in gold. That's great for the gold mining companies because that's a major input. Also, their wages, the dollar has been relatively firm, and so the wages are low compared to where they would normally be with a big gold rise. Normally, the dollar is falling against a lot of these currencies where the wages are denominated, but that hasn't happened. So I think these companies are in great position. They've also cleaned up their balance sheets over the years, paid off debt. They're generating tons of cash right now. The big companies trading at ridiculous valuations relative to what's historically been the case. I think there's going to be a major consolidation in the industry. I think a lot of the smaller companies are going to end up getting bought up by the bigger companies because they're not going to have much to do with all the cash. It's going to be a lot cheaper than, funding exploration projects. Just buy up some of these super cheap companies, and get a sure thing instead of gamble. But, the fact that we've had so little investment over the years in exploration and development means that when the gold price is 3,000, 4,000, 5,000 higher, you're not going to see a lot of new gold coming to the market to take advantage of those higher prices because the industry just doesn't have the ability to produce it. It's going to take time to bring a lot of these mothballed mines back into production, and it's going to take even longer to find more gold. So we're not going to see a big increase in supply. We'll see some, but nowhere near the increase that we're going to see in demand.
Very interesting. You mentioned quantitative easing and that would continue in the future. We saw the Fed cut rates by 50 basis points. Some were expecting 25, some were expecting 50. Nonetheless, this looks like we are at the start of a rate cutting cycle. What does this mean for the inflation picture? I know you've said in the past that you think inflation is going to come back with a vengeance. Is that your view currently?
Yeah, of course. I mean, where does inflation come from? It comes from the Federal Reserve monetizing government debt. Well, government deficits have never been this large. And so we're going to have more inflation than ever before. It's just a question of when does the Fed go back to QE? And I think it happens early next year. The rate cuts are just the beginning. The QE is the next part because the Fed wants to get long-term interest rates back down. It wants to help the housing market. Well, just cutting short rates isn't going to do that. In fact, long-term rates are likely to rise despite these rate cuts because they are inflationary, and the Fed does not control the long end of the curve, which has to price in the higher inflation that results from the easier monetary policy. So I think at some point, the Fed is going to go back to QE in order to artificially suppress the longer end of the curve because it can print money and buy those bonds to push down the yield. But that's just even more inflation. And so it's coming, and again, the politicians are not leveling with the public. They're saying we don't have to have any cuts to government spending. We can get all the Social Security we were promised. In fact, we can get more. Donald Trump says, hey, we're not even going to tax your Social Security benefits. So we're going to get more Social Security benefits. We're going to have lower taxes. Well, that means we're going to have higher inflation because we have to pay for government somehow. And it's clear the only way politicians are willing to charge us for government is through inflation because then they can blame it on somebody else. They don't have to accept the responsibility because they didn't physically take our money. They just took our purchasing power by creating money, and now they can blame it on, greedy businessmen or Putin or speculators or whoever is the scapegoat of choice, but they won't accept responsibility. So we're going to have a lot more inflation. I do think that the Fed's rate cut cycle is going to get aborted before they get back down to zero. I mean, I don't know that they'll make it all the way back down because I think that the foreign exchange markets may not cooperate, and we could go into a free fall with the dollar. Inflation could really start to get out of control. And so the Fed may have to start hiking rates in order to stop it.
Well, with this backdrop, a potential recession, inflation resurging, the dollar in free fall, where are you looking for value in the markets right now outside of gold, silver, and the mining equities? Where else do you think presents upside potential given that scenario?
Well, I've been recommending the emerging markets, and this has been a hell of a week. Last week, we finally have seen a big move. We've been overweight a lot of these Chinese names, and there's a lot of value in the emerging markets. And I think, the markets are now just starting to recognize that. This new stimulus out of China was a catalyst to kind of wake up a sleeping giant here. I don't think the stimulus is a good thing, but it's just that the market was so cheap that it was just looking for a reason to go up because everybody had left it for dead, particularly the Chinese names. But I like emerging markets. I like businesses that will benefit from a weakening dollar, and emerging markets will thrive in a weak dollar environment. They're hurt by a strong dollar because they have a lot of dollar debt. So you have a lot of emerging market companies that owe dollars. And as the dollar goes up, it makes repaying that debt more difficult. But as the dollar goes down, it's like large amounts of debt are just forgiven. They're wiped out. So I think that's going to be a good environment for those economies. It's going to keep their prices lower on a relative basis. And so I want to be in those stocks. I want to be in other resource-related names, energy, agriculture, companies that do well with inflation, defensive stocks, companies that produce products that people have to buy. Even if the price goes up, they'll keep buying them. Like we have, tobacco stocks as an example. I mean, people, if the price of cigarettes goes up, you're not going to quit smoking. I mean, you should quit smoking, but the people that haven't quit yet, they're not going to quit. They're going to keep on smoking. And if the price of cigarettes goes up, well, they'll just have to cut back on something else. But they'll keep, So, we own those companies. And, we own a lot of companies, food and beverage type companies, pharmaceutical companies. Look, people are sick. They're going to take drugs. The government's going to fund this. So, you're going to cut back on other things. So you want to have portfolios of goods and services that people are going to need. They're going to buy. Even if they buy less, they're going to buy. And, companies that are not expensive on a PE basis, that pay good dividends. based on actual income, not pie in the sky companies that, well, we're going to make money in 10 or 20 years if all these great things happen.
Well, let's talk about China for a moment here, because the picture being painted by the mainstream press is that China is in terminal decline. Their demographics are terrible. The economy is falling apart. They had a mega real estate collapse, and that's greatly affecting the economy in a negative way. They're centrally controlled, on and on. It seems to paint a very negative picture. Yet, as you mentioned, we've seen a resurgence in the equities recently. So I'm wondering, from your perspective, how do you separate fact from fiction there?
Well, if the mainstream media says it's fact, it's probably fiction. They generally get it wrong. So if the mainstream media is very critical of China and says China's finished, China's a disaster, you probably want to invest in China. It's when they're talking about how great the U.S. economy is, everything is perfect, it's the best of all worlds, it's Goldilocks. It's because, the U.S. is in a lot of trouble and they just don't recognize it, and U.S. stocks are overpriced, and they don't know that either. So you generally want to fade the mainstream media, but you do need to have a long-term time horizon, because it may take a while for the media to be proven wrong.
And any concerns about potential sanctions on Chinese equities in the same way we saw with Russia? Because China does seem to be in the crosshairs of the US administration, the next enemy. We're preparing for war with China in the future. Do you have any fears that they could do the same thing they did with Russian equities?
Yeah, absolutely. That's one of the reasons that the stocks trade at a discount, because people are worried that the US will just outlaw the ownership, which isn't really bad for China. It's bad for Americans, because it's the Americans that lose the ability to own these assets, and Americans who are forced to sell them at a fire sale price. It's a huge win for whoever gets to buy the stocks from the Americans who are forced by their own government to divest. But it is something that keeps the prices down now, because Americans are worried, and a lot of advisors, fiduciaries, are worried about taking these positions and then being forced to sell them, because when you're forced to sell something, there's generally a low price, because the markets take advantage of the fact that you're forced to sell. But it's terrible when the U.S. government does that. You should be able to invest your money wherever you want, and it doesn't actually hurt China to say that Americans have to sell the Chinese stocks that they own. How is that? I mean, this is a market. It doesn't affect. In fact, it may benefit China if the Chinese get to buy those stocks back from Americans cheap, right? So it doesn't even work. It doesn't even accomplish. Now, if you said, hey, we're not going to let the Chinese come to our capital markets and raise money and sell stock, okay, that might do something. But if you're talking about stock that is already out there, that's owned by an American citizen, it doesn't hurt the Chinese company if some American citizen has to sell his stock, for a low price to some German or whoever, or somebody else who's not sanctioned. It's whoever doesn't get sanctioned gains whatever the American loses. But in all this too is unconstitutional. But they get away with it. You have freedom to invest your money and buy whatever assets you want. Doesn't matter if the U.S. government doesn't like the policies that the Chinese government has. You still have a right to own that stock.
Well, Peter, this has been a fantastic conversation. Always appreciate your time. Before I do let you go, tell us about Euro Pacific Asset Management, the Peter Schiff Show, Schiff Gold, anything you want to talk to us about, feel free.
Well, I mentioned Schiff Gold. So Schiff Gold is the company to buy gold and silver, physical gold and silver. Everybody should own some physical gold and silver, not just an ETF, but actually have it, in your possession in case you really need it, especially with silver. You may need it, you may barter with it, or may use it as money again. So go to schiffgold.com. Euro Pacific Asset Management is my asset management company here in Puerto Rico. We manage 5 mutual funds, including the gold fund. The symbol there for EPGFX. Now that's got the load. EPIGX, I think. EPGI. Always mix them up. EPGIX is the no load symbol of my gold fund. So you can buy that at any discount broker. But we have 5 mutual funds that we have. You can buy them all, too, at europac.com. Just go to the website. You can actually buy them through our website. But if you already have a Schwab account, Fidelity, any discount broker, we're on all the platforms. But if you'd like me to manage a portfolio of my funds, we have wrap accounts that we can set up at Euro Pacific Asset Management. We also have separately managed accounts. So if you'd prefer to have an individual stock portfolio that we manage, we build it and we manage it, we can do that for you at Euro Pacific Asset Management. So you contact the company, talk to our representatives. We can handle a taxable account, your retirement account, IRA, pension, all that. We can manage it and get you out of U.S. dollars, out of U.S. stocks, into foreign dividend-paying value stocks, emerging markets. I think stocks that will do well in the stagflation, maybe runaway inflation environment into which we are headed. Peter Schiff Show is my podcast. I do at least one a week, sometimes more. This week it'll probably just be one with the Rosh Hashanah holidays, everything going on. But Friday we do get the jobs report for October. So I'll do a podcast probably on Friday at schiffradio.com or on my YouTube channel. I do them live, so if you go on YouTube, you can see me as well as hear me. Some people like that. It feels more personal when I'm talking and you can see me. But hey, I got my newest project is a Schiff Sovereign. We have a free newsletter that comes out several times a week. You can go to schiffsovereign.com and sign up for the free newsletter. We do have some other premium services that you can learn about, but at least get started by reading the free letter. Again, that's schiffsovereign.com. And also follow me. I've got over 1 million now followers on X. Trying to get to 1,000,001. It's rough going. I'm almost halfway there. But I do post quite often. As you read a couple of my posts. I do them all myself. It's not some other person that I hired to post for me. So I'm just communicating that way. I'm also on Facebook, Instagram, TikTok. So you could follow me everywhere they have social media.
Great. Well, I'll put links in the description below to those places so people can learn more. Thank you so much, Peter, once again for coming on the show. It's been a blast.
Thanks, Jesse. Take care.
And thank you for joining us today. This episode was brought to you by ARC, silver, gold, osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.